Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, September 12th, 2023. So we kind of had a mixed bag today. We had the Russell and the Dow that were trying desperately to bring up the Nasdaq and the S&P. We had the Dow that was up over 120 points at one point. It did bring the S&P back up to right. It was a pretty decent little move that got us close to where we closed the gap that we had today. And but then from there we just saw sellers step in, so we're stuck within this range right here where we have the bottom of the range that's at the 44.48, and the top of the range is up at the 44.96 level. Until we break through these, everything else is just kind of it's short term. Now I was kind of thinking that there wasn't going to be a whole lot of anything going on today heading into the CPI number, but the weakness of the Nasdaq just really pulled the S&P down. So I said that you can try to take a long position at the 44.70 level, which was support. We broke through it, but then we jumped back up, and then once we made it up to this resistance, we saw sellers step in again. So if it's right around 9 points underwater right now. If you took that, it was a self trade, it was a quick trade, and I'm not sure if you held it going into the CPI numbers. One, I did say that is that it's going to be a little bit dangerous going into it, because if it comes in a little bit higher than expected, most likely we're going to be opening up down near the 44.31 level. If it comes in lower or better than expected, we're probably going to be opening up near the 4,500 level. So I do believe that this little, say, range that we're in is going to change a little bit, and we're probably going to be either breaking out of this and heading up to the 45.10, maybe even up to the 45.40 level. We have to wait and see. But if they come in, hotter than expected, then this is really one of the last lines for the bulls right here at the 44.31. Because if they lose that, then really what we're looking at is the next move coming down to the 44.15, and then there's nothing here. You can see this goes straight back down to the close to the 43.54 level. So this does look like it's a bear flag. So it's not anything to get overly bullish about. But the thing is that with the CPI numbers coming out tomorrow, it's a pretty big market moving data drop. And if they most likely, like I said, if they're better than what people think, then we're going to be gapping up to these levels right here at the open. If they're worse, we're probably coming down to the 44.30 at the open. And then we just have to see how support and resistance acts there. Because if the bulls lose it, like I said, we do have another support area that's right here at the 44.17. But again, if they lose that, then we're coming down. Now, the reason why the CPI numbers are going to be such a market moving event is because all the talking heads, this is really what they had this ramp up in May from, is that they were on the belief and dream that the Fed was going to stop raising rates and going to start lowering them. And I will repeat this till I'm blue in the face. I do not see the Fed lowering rates until sometime in the second half of 2024. And if they are going to be lowering rates at that time period, most likely we're going to see the S&P down near the 4,000. They are not going to start lowering rates when the S&P is 10% in that range from the all-time highs, because inflation is, it's here. It's not going anywhere. And oil was up pretty good today, and that's going to automatically start bringing up the inflation numbers, because gas is a big part of it. And in New Jersey, where I am right now, it's not cheap at all, and this is going to drain on the consumers. So it's going to be pretty important. If it is better than expected, then I believe that the short term pop is going to be something that we want to fade. But like I've been saying, I've been being a little patient with this final quarter, because I don't want to really jump in front of things, especially when they're pretty big market moving data drops that are coming out like tomorrow. But then on top of that, we also have triple witching on Friday. So we're going to see volatility pick up here, and it's going to be a little bit dangerous. And I'll try to guide you through as best I can. But right now, I would just kind of stay open minded for tomorrow. Again, if they pop up, we're going to look to fade that at our resistance levels. And if it drops down, we're going to see where's how support holds. So it's that's really about it. There's not much to go over. The Bears, they got to get it through to 44.50 for a drop down to the 44.31, more likely down to the 44.16. The Bulls, I'm not even counting this right here. I'm going to say the Bulls got to get above the 44.96 level, and that will give them an open door for a test of the 45.20 and possibly up at the 45.40. So with that, I'm just looking at this. We do have a little bit of a buy signal on the 15-minute chart. Nothing on the we have no buy or sell on our 60-minute chart, which is again having me just kind of leaning kind of neutral right now. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.